Hey everyone, in this video I'm gonna go through and answer why everyone is talking about Tesla stock right now. And in my opinion, the big story around Tesla's stock right now is the price cuts, the major price cuts, nearly seven in the last 3 months across the world, right? Globally price cutting campaign and what that could mean for investors. And so I'm going to go through the company's latest conference call where it answered questions from Wall Street analysts and others. And of course, one of the main curiosities from investors in Tesla stock is the price cuts. So let's get into this. The first question saying, what is the process to make auto pricing adjustments? What variable costs do you consider and how frequently do you review pricing? And the CEO, Elon Musk, jumping in and saying, I think this is not something that we can talk about. It's just we do our best to evaluate the production output, macroeconomic conditions, and we make a decision. Now it's understandable the company cannot and the CEO cannot broadly discuss and in detail discuss their pricing strategy. Otherwise, the competitors will get a bit too much insight into how the company adjusts pricing. So it's understandable. Didn't want to go into too much detail about pricing and the pricing strategy. So the next question says, what do you anticipate 2023 automotive gross margins ex the credits will be at the company's current pricing levels? The CFO now jumping in and saying this is a difficult environment to make a projection like this. He goes on to say two major costs there are being logistics, which fortunately is moving in our favor. However, we're still kind of at the maximum pain point for commodity prices in our cost structure. Now, I've been talking about rising commodity prices for several months now as a result of increasing competition. I've been saying that regardless of Tesla's competitive advantages against its competition, the fact that competition is coming in and increasing production capacity, it's bad news for Tesla's profit margins because Tesla's going to have to pay higher prices for those same inputs because now not only Tesla is trying to buy these same materials to make EVs, but now Tesla is having to compete with Ford and Rivian and Lucid and GM and Honda and Toyota and so on and so forth that are all going into those same materials markets and buying those same things. So of course, when demand increases, the price increases. Suppliers now come back to Tesla and say, you know what? I know we were charging you only $100 for this same thing last year. This year, we got to charge you $250 for it. I'm sorry, but now we've got so many other buyers, we don't have enough, so we're going to send it to the highest bidder. And if that's not you, oh well, we'll sell it to another EV car maker, and there's plenty of them right now, so we don't need you as much as we needed you 3 years ago. So here's something interesting because now whenever you reduce the price of any product, typically the consumer response is that demand goes up, right? If you've taken introductory economics and maybe, if you're watching this, maybe you're one of my students in my econ courses that I teach at university, and I teach this to my students all the time, is that, and I show a nice chart and graph that shows when price comes down, demand goes up, right? That's just the law of economics. It's just the way consumers respond. Lower prices makes an item more attractive to buy. So this next question relates to that. They ask, how has global orders changed since you cut prices? So has demand gone up when you cut prices? And Elon Musk says, I think the overall thing we can say is that orders are in excess of production. trying to say that demand exceeds their supply, which I'm not too convinced with, because if you've been looking at Tesla's inventories, their inventories are actually building, which shows perhaps that they're not selling as much as they're producing. Now, they've given an excuse to that matter, being that, oh, it's the only reason we have this inventory is because it's in transit, it's on its way to customers, and it just hasn't got there yet. So that's why it's showing up on our balance sheet. And I'm going to need to see more data to be convinced of that fact. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So the next question asks Elon again on the pricing strategy. So if I understand your message, you're saying Tesla feels like it's worth maximizing the volume, increasing the size of the cars, increasing the amount of cars out there as fast as you can, because you'll be able to monetize this over the life cycle of the vehicle. Meaning you can sell these people software upgrades, you can sell these people services, you can sell these people other things, charging and so on, and generate more profit longer term in that way, instead of trying to make more money off of each car you're selling right now. And the CEO saying, all of the vehicles that have hardware 3, which is the vast majority of our fleet, we believe will reach full autonomy, so complete self-driving. So there will be like a Model 3 or a Model Y, which might be a robo-taxi, because it can be self-driving, so it can just become a robo-taxi where it can just go around picking people up and dropping people off and generating revenue in that way. And then the analyst is following up saying, asking the company, saying, you know what, a few months ago you told us that, gross profit margin, the lowest it would fall to is 20%, but in this quarter it fell below that. So what happened? And if you want to see, I have here a chart of the company's most recent quarterly results, and you could see gross profit margin here absolutely collapsed. It was 29.1% in the first quarter last year. It fell to 19.3% in this quarter, which is a 977 basis point decrease. And all that caused is an 18% increase in total automotive revenue. So all those big price cuts didn't increase demand all that much. Didn't increase demand all that much. And so it was a little disappointing for Tesla stock investors. And so the CFO jumping on to answer that question, saying about half of that miss against the previous conversation from the last quarter was the pricing that we made in the second half of the quarter. I mean, I guess you can argue that lowers the floor, so even below 20%. But also, we've made pricing adjustments so far in this quarter, so that brings it down even more. That brings it down even more. So this is a little clue that the CFO just gave Tesla investors. If you're paying attention, which I was, and which I am, and now that you're watching the video, you're going to be privy to this, that next quarter, Tesla's gross profit margin might be even lower, might go even lower. So in this quarter, it fell to 19.3%, and that was a big drop from the previous year. In the next quarter, it might fall even more. How much lower? I don't know. I don't know. But it's likely to be below 19.3%. So if you were thinking this profit decline was a one-time thing and it's going to bounce back up in the next quarter, that's not likely to be the case, according to what the CFO is saying and according to what's going on in the industry, right? Tesla cut prices, but so did the competition. So everybody cut prices. So competitively, it's not like Tesla's pricing improved all that much versus the competition, because they cut prices too. Now, yes, the competition is losing money on each car it sells, most of the competition. But that's besides the point. They can still cut prices. Some of them have other parts of their business that's generating enough profit and enough cash flow where they can invest in the EV business and absorb losses. And then others have so much cash on the balance sheet that they can just absorb losses for, at least another 2 years before they need to worry about, running out of cash. And I'm thinking Rivian, like Rivian in its most recent quarter had, as of December 31st, they had like $12 billion on its bank account. So they could keep losing money on each car for another 2 years before they really need to seriously consider raising more capital or changing the business model. So this gross profit margin story decline is likely to be persistent at least over the next 4 to 8 quarters. All right, so that's all I've got for this video in what I think is the primary reason why so many people are talking about Tesla stock right now. And it's the pricing strategy. It's the decision to focus on growth. It's the decision to say, you know what? We're not happy with our competition. We're not happy that they're taking market share. We're going to show them that we're not going to let them take that market share. We're going to lower our prices, and we're going to force them to take bigger losses and see how long they can last. And so that's the big story, and it remains to be seen how um, consumers will respond. So far, consumer demand has not jumped up in response to lower prices. So we'll see what that looks like in the second quarter and third quarter and beyond. We'll see if consumers start responding to these lower prices. All right, that's all I've got for this video. Thank you so much for watching. I really appreciate your viewership, and I hope I'll see you again soon.